Welcome to our Strategy Explainer. If you're gearing up for retirement, or maybe you're already stepping into it, you know the financial landscape right now can feel, well, a bit overwhelming. Today we're going to lay out a crystal clear, actionable plan to shelter your retirement portfolio from all that exhausting market noise and really lock in a reliable income stream. As your advisor, my #1 goal is giving you total peace of mind, and we're going to use the data from our research today to build that solid foundation. So let's just jump right in. Section 1. Navigating today's market volatility. All right, so first things first, we've got to acknowledge the incredibly volatile, noisy market environment going on right outside our window. I mean, it's wild out there. And it brings us to the ultimate question for today's explainer: how on earth do we protect your life savings when these chaotic headlines and aggressive market trends are just dominating the ticker tape every single day?
Just take a look at the most active board today. We're seeing some massive, aggressive daily swings. Rocket Lab is up over 34%. Intel jumped nearly 14%, and IREN is up over 7%, all in a single trading session. Now look, while that kind of movement is a total thrill for day traders, it's a roller coaster ride we absolutely do not want your core retirement funds strapped into.
And honestly, the financial press doesn't exactly help keep things calm, do they? We constantly see headlines exactly like this one. This new AI trade is leaving Nvidia and Micron in the dust. The media loves to hype up the next big growth trade. But chasing that kind of adrenaline, that's the exact opposite of a sound, diversified retirement strategy.
Moving on to Section 2, shifting to retirement goals.
To ease your anxieties and actually protect your capital, we need to formally shift your portfolio's mindset totally out of that flashy fast lane. We're moving your money away from the high-risk growth phase, the one characterized by high volatility, wild tech swings, and all that AI hype, and we're stepping strictly into the retirement phase. Here, income stability, proper portfolio diversification, and building a protective shield for your peace of mind, those become our absolute non-negotiable goals.
Section 3. The Preferred Securities Solution. To actually pull off this stability, we need the right tools in our tool belt, and the specific asset we're utilizing to anchor your income strategy is the Invesco Preferred ETF, trading under the ticker symbol PGX. Now, let's define exactly what that is. A preferred ETF obviously focuses on preferred securities. Think of these like a really unique hybrid asset class. They sit comfortably right in the middle between aggressive equities, like common stock, and conservative fixed income bonds. It's kind of the best of both worlds.
And this right here brilliantly illustrates why PGX is the perfect tool for us. As a preferred shareholder, you actually get a higher priority claim on a company's dividends than regular common stockholders do. Pretty great, right? Plus, this specific fund maintains an investment-grade country risk profile. That means we get attractive yield potential without taking on unnecessary, scary global hazards.
Let's look at Section 4, inside the PGX portfolio.
As your advisor, I always want you to know exactly where your hard-earned money is going. Total transparency is literally the key to peace of mind, so let's pop the hood and see what this fund actually holds. What's super compelling about this top holdings list is just the sheer quality and stability of these companies. Instead of hoping some volatile tech startup makes it big, you own slices of massive blue-chip financial and telecom institutions. We're talking heavyweights like JP Chase, Wells Fargo, Bank of America, and AT&T. These are established giants providing the absolute bedrock of your monthly income. On top of that, we're keeping your geographic risk incredibly tight. Nearly 95% of the fund is safely invested right here in the United States. We definitely aren't taking wild bets on unpredictable emerging markets with your retirement savings.
Which brings us to Section 5, generating reliable monthly income.
Okay, let's get to the most important part of this entire explainer for your day-to-day retirement life, the actual tangible income this strategy generates for you. As of May 7th, 2026, the 30-day SEC yield on the PGX fund sits at a very attractive 6.20%. In a world full of unpredictable market noise, securing a sturdy 6.20% yield provides just a fantastic buffer and incredibly reliable cash flow.
And it gets even better for your bottom line, because most of these preferred dividends are considered qualified dividends. This means they get highly favorable treatment at tax time, often being taxed at a strictly lower rate than your regular ordinary income. Because as we always say in retirement, it's not just about what you make, it's about what you keep. So, the crucial point is how this actually hits your bank account. The PGX fund earns dividends from those blue chip holdings and then pays out its distributions on a monthly frequency, like the roughly 6 cents per share it paid out on April 24th. This essentially acts as a direct, super reliable replacement for your old working paycheck. Which leaves us with this final thought for today. By intentionally trading the anxiety of 34% daily stock swings for a steady, well-diversified 6.20% yield, we can ensure your retirement remains stable, predictable, and totally stress-free. So ask yourself, doesn't that sound infinitely better than losing sleep over the latest AI hype cycle? Thank you so much for joining me for this explainer. I really look forward to continuing to build your stable financial future together.